I suggest to continue studying cash flow compilation with solving problem 68 out of the problem book. It's like a straightforward problem on cash flow compilation, and here we are given with the two types of financial statements: statement of financial position for 2 years and income statement for 2 years also. And some additional notes suggest us to consider information which should be accounted for somehow for the purposes of cash flow compilation. And the requirement is to prepare a cash flow statement for the company for the year ended at 31st of March 2020. I believe that the date is very important here, so we have to consider the start and end of the financial period, which not the same as the calendar year. So let's start compilation. Let's start the solution. This is the very straightforward problem. And let me just remind you the structure of the cash flow statement. The first thing you have to do is to name it properly. So we'll write up the name here. And then we have to start with operating profit before interest and tax, which was compiled using the accrual basis. So it was the accrual figure calculated. Now we have to move somehow to the cash basis, to the cash movement, adjusting profit before interest and tax on non-cash items, non-cash income and expense. We have to exclude income added for the purposes of profit calculation, and we have to add back expenses which were deducted during the year and which are not cash. So for example, depreciation. Then we have to adjust for changes in working capital. Changes in working capital, in Russian we call it оборотный капитал. And that would be the first portion of income of cash flow statement, which is cash from operating activity. Then we have to consider, let me write it down, operating activity, operating cash. So cash from operations, cash from operating activity, the main activity of the business. But the second section of cash flow should be accounted for separately. We have to consider all the cash flows connected with purchases and sale of non-current assets, which are fixed assets mainly, and sometimes we're going to face up with intangibles, or maybe some investments. Investments should be considered as intangible asset also. Non-current assets, purchase and sale. And the last section of cash flow statement, this is the cash from financing activity or cash used in financing activity. So here we have to look at the sources of financing our business, which are mainly equity. So we have to see how the equity changed during the period, and debt, long-term loans, long-term debts, maybe some debentures, borrowings should be considered here. And once we filled in all three sections, we can calculate net change in cash. Net change in cash should be equal to the change at the bank balance of the firm. So we have to consider opening bank balance together with overdraft, which should be found out looking at the current liabilities of the company, and closing bank balance and overdraft also. Sometimes in problems we are told that we have to consider short-term investments like deposits, government bonds as cash equivalents also, but not in that case. So that would be our tasks for today. Let me clear the screen and start the solution. The first thing we have to do is to name the report properly. So the name should include the name of the company, and the name of the company is Ecless Foods. The name of the statement, cash flow statement, and the period we are looking at for the year ended at 31st March 2020. And we also have to state the currency and the size of the currency, порядок валюты. So here we would have all amounts in million pounds. And the very first amount, the very first line we have to start the compilation of cash flow is operating profit. Profit before interest and tax, or operating profit, could be found in income statement. So we have to look at the statements provided. We have to find out the income statement, and we have to take the income statement as at the end of the year, so for the respective period, so 2020, and find profit before tax or operating profit line here. So we have operating profit given in amount of 167. We have to put that figure as the first figure we are to start with. 167 should be placed here. Then we have to adjust, as I said before, for all non-cash items. So we have to add back depreciation expense. Depreciation expense for the year. We have to consider loss or profit on disposal, and we have to look at the current assets and find their accounts receivable, and check if we have any provision on bad debt in order to account for the change for the respective period. So let's start with the depreciation expense. Depreciation expense could be found either in income statement or in special notes provided. So let's look at the income statement. Can we find the special line depreciation here? Can you see the depreciation expense here? I cannot see it, but I believe we can look at the notes, and we have the first note about tangible fixed assets, and here we can see the so-called roll forward, the roll forward from the beginning of the year to the end, what happened during the year, additions, disposals, and we can find the line which reads depreciation expense for the year. Accumulated depreciation for the year changed by 45 with a plus sign. That was the expense which was charged into the income statement with a minus sign for the purposes of profit calculation, and now we have to add it back. So we take that amount and put it with a plus sign here in order to adjust accrual profit by the expense deducted before, and now we have to add it back in order to come closer to the cash movement other than accrual income and expenses. Let's consider note one more time. Here we can see the line disposals. That means that something was sold during the year, and we have an information about this, the proceeds received out of the sale, that was 10 million, and the company sold something with a net book value of 17 because historical cost of that something was 30, accumulated depreciation 13. That means that net book value at the moment of sale, was 17, and cash proceeds 10 million. So we can conclude that loss on disposal was accounted for in income statement and was deducted from operating expense for the purposes of profit calculation. Now we have to add that 7 back. Difference between 17 and 7. So let's consider loss on disposal in amount of 7, which should be added here because 7 is just a financial result. It's not a cash received or spent. It's a financial result which was calculated. As for that operation, we have to consider cash receipts of 10 millions later in respective section of cash flow, and we call that section investment activity. So the total amount received in cash for that sold item we have to consider in below in the respective section of cash flow. And let's take a look at the current assets, trying to find the information about bad debt provision. I can see here debtors line, but I can't see any information about provision on bad debt. So we can conclude that no provision on bad debt exists in their company. So we can just skip the line which actually often appears in that section. So no provision on bad debt, no adjustment needed. We can continue with the accounting for changes in working capital. Changes in working capital. What is working capital? Working capital normally is current assets plus current liabilities. So we have to consider here change in inventory, change in current asset inventory. We have to consider here change in accounts receivable. Accounts receivable are current assets also. And we have to consider here change in accounts payable or creditors. Change in accounts payable or creditors. So let's look at the inventory, accounts receivable, accounts payable, and calculate these differences. So what for inventories? Inventories increased from 2019 to 2020 by 81. That means that the other factors being equal, of course, that means that company purchased additional inventory and spent cash. So we have to consider that increase in inventory as decrease in cash. So let's write it down here. Increased. That would affect with a minus sign on cash as decrease in cash. And we can calculate it here. 482 less 401. That would be the calculation of change in inventory. Change in accounts receivable. Let's look at the current assets section one more time. Debtors are highlighted with violet. We can see that debtors increased also by 39. That means that debt from customers to us increased, and that would negatively affect our cash. So that increase in current assets debtors would decrease total cash available. So we'll write down increase one more time, and we have to deduct the difference out of the cash available, because increase in current assets other than cash will negatively affect the total cash available in the company. And the last line which should be considered here is accounts payable. Accounts payable is a liability. So we have to look at the current liabilities section, find the creditors due within 1 year. That would be current liabilities. And we can see increase falling within 1 year, yes. And we can see increase here also, but here we have to consider note 2, if I'm not mistaken. No, 4. Note 4. Note 4. Before we started the solution, we have read properly, attentively, all the wording of the problem. Is the key to success. And we do know that in note 4, creditors falling due within 1 year are described in very details. And here we have to consider trade creditors only for the purposes of accounting for changes in liabilities. So only that line should provide us with the respective information. The total amount of creditors, trade creditors, decreased, and that would negatively affect our cash again. So the total amount of creditors decreased from 130 to 110 would decrease, 110 would decrease our total cash available by the same amount, decrease by 20. So net change in working capital is 140. And once we have calculated net change in working capital here, and we have adjusted for non-cash items, we can calculate the first subtotal. We call it cash generated from operations. Cash generated from operations. $167 plus 44 plus 7 less 140. That would give us 78 positive. I will somehow highlight it or underline that first subtotal. So this is the amount of cash generated from our normal operations, routine operations, our main business. But within the cash used in operating activity, we have to include taxation paid and interest paid, because normally tax is something which is closely interconnected with our operating activities. So we have to put that amount here. So we have to state here tax paid and interest paid, actually paid, not the expense. So as for tax paid, we have to consider three amounts. In order to calculate what was the total amount of taxation paid, we have to refer to the note 4, because here in note 4 we have information about taxation liability, tax payable at the beginning of the year, the end of the year, and we have to refer to income statement also. We have information about taxation here also. So if we want to calculate the tax paid for the period, we have to consider the opening tax liability. At the beginning of the year, the company owed 80. At the end of the page, you can see 80 as tax liability for the taxes from the previous period or periods. So the company owed 80. Let's calculate it. During the year, the company earns profit, and for the 2020, the company have to pay 80 more only for that period. So that was previous year's liability. That was the current year tax expense. And company, of course, paid some amount of money. We do not know the exact amount right now, but we do know that at the end of the year, the company is still owed 90. 90 is the debt as at the end of the year. Using our incredible math skills, we can conclude that the total payment which was made during the year is 80. So that 80,000 pounds was paid by the company to the tax authorities, and we have to put that amount into our calculations. So tax paid was 80. Let me show the calculation one more time. The liability at the beginning of the year 80, expense for the current year 90. So the total amount which the company should pay is 170. But since the company is still owing 90, we can conclude that the total amount paid was 80. So only the obligation of the previous periods. As for interest paid, we have to refer to income statement and, I believe, additional notes. In income statement, we have the line which reads net interest paid. What does the word net means? That means that during the year the company has paid some interest, so there was some interest expense, and the company received some income. So this is the total sum, the net sum of interest expense plus interest income. Let's refer to the note 4 in order to understand what was the interest income, if any. Since, I'm sorry, not the 4, but 3, note 3. We are interested in note 3, fixed assets investment, non-current asset investment, I'd better say. We are told that the company purchased some additional shares, which are classified as long-term investments, and during the year the interest received in cash was 5 million. That means that if in income statement we have 3 as net interest paid, and we do know that interest income was 5, we can calculate what was the interest expense. The interest expense was 8. In order to receive 3 with minus, we have to net off 5 of income with 8 of expense. So we have to consider here interest paid in amount of 8 and interest received in amount of 5, which is described in note 3, should be considered under cash flow from investing activities, because purchase of shares for the subsequent receipt of interest or dividend is investment itself. So here we have to consider only interest paid. And then we can calculate cash from operating activity, or cash used in operating activity. Cash used in operating activity. That would be the sum of 78 and taxation paid and interest paid. That would give us less 10 with minus. So the total cash used in operating activity is 10 with minus. That would be the first very important subtotal, the end of section 1 of cash flow statement. And we have 2 sections to go. The next section of cash flow statement is called cash from investing activities, or cash used in investing activities, as you like. Cash used in investing activities. Investing activities, as we discussed earlier, is the purchase and sale of non-current assets. And for the purposes of filling that section, we have to remember that first of all, we have interest received in cash as investment income, and here we can put right now 5. This is note 3. And then we have to look at the balance sheet, non-current section, and see whether something changed from year to year. Here we have all non-current assets, and we can see the change in tangible, intangible, and the investment sections of the non-current assets. So let's start with the tangible assets. We have note 1 describing the roll forward of fixed assets in the company, and we can see that there were some additions at cost. It means that company purchased new fixed assets for 82, and that amount was totally paid in cash because no other information provided, no payables in respect of that fixed asset purchased. So we can put that 82 as spending, cash spending for purchased fixed assets. Fixed assets purchased plus 82. Oh, no, less 82, of course, because that amount was spent on the purchase. I'm sorry. Then we have to consider the purchase of investment. We have to refer to note 3 one more time. And we can see here that additional shares were purchased for cash and no other additions occurred during the year. So we have to consider the purchase of investment. We can see here in the statement of financial position the increase in total value of investment from 64 to 82, and the difference between these two amounts is the spending on newly purchased investment. So we have to write it down here. Investment purchased the calculation would be 82 less 46, and the difference was the amount spent on that purchase, 80. As for intangible assets, within non-current section we have considered tangible purchase and sale in investment purchase, and no sale was recorded as it said in note 3, but intangible assets are described in note 2. We can see the fall in valuation by 4. And note 4 tells us that intangible fixed assets decreased in value because the goodwill impaired, and that was treated as an exceptional item in the profit and loss account. And since exceptional item is below the operating profit here, we shouldn't account for that somehow. Exceptional item, the fall in valuation of goodwill, is non-cash expense for sure. But since we have started with operating profit, an exceptional item was written off below that calculation, that amount would not affect the cash flow compilation. So we just skip that information. No impact on cash flow statement. Great. So we have considered all the investing activities in the firm. We have account for interest received. We have account for investment purchased. We have account for fixed asset purchased. Oh, we forgot that we have sold fixed asset item. So fixed asset item sold was described in note 1, and we have already accounted for loss on that disposal. And now we have to account for cash proceeds. 10 million pounds were received in respect of that sold fixed asset, and that 10 should be added as cash inflow for the purposes of cash flow compilation, because it wasn't added anywhere in income statement. Only loss on disposal was accounted for, and we have adjusted for that right now. Now we can calculate the net effect of investing activity in the firm. So we have to sum up cash receipts from sale of fixed asset. We have to deduct cash spending on purchase of investment and fixed asset. So the total negative would be less 10. Here we would have plus 15, less 85. 85 with minus sign. That would be net cash used in investing activity. Cash used in investing activities. I would copy the name of the line here. I don't need to spend time. So net cash used in investing activities, 85 with minus sign. That would be the second subtotal which we are looking for, the very, very important figure for us. Section 2 of cash flow. And the last section of a cash flow statement is the cash used in financing activity. Financing activity describes the sources to finance your business. Normally these are equity, so we have to consider here share issue and dividends payment, and borrowings, long-term debt. So let's look at the statement of financial position. Here we have loan stock, which was decreased, which was repaid during the year. The total decrease is 213 less 181, and that amount, it seems so, it was repaid to the bank. So 32 is the difference between opening and closing long-term debt balance, should be considered as cash outflow. So loan repayment, the calculation would be 2013 less 181, and the total decrease equals 32. This is the outflow due to loan repayment. Then we have to look at the share capital and note 5. Here in note 5 we are told that 80 million £1 shares were issued with premium. So what was the total amount of cash raised? We have to multiply 80 million shares by the 1.1. 88 would be the total amount of cash raised. But we are also told that the share premium account was utilized in making a bonus issue of ordinary share. So normally, if no bonus issue was done afterwards, we would see the increase in share capital by 80 by the nominal value and increase in share premium by 8. But if we look at the balance sheet, we could see here that share capital increased much more than only by 80, and we have no share premium here. And since we are told that share premium was fully utilized by bonus issue, but we do not know any information about bonus issue, the value of shares, and the total amount of shares, we can just ignore that information. The only thing we are interested in is the amount of cash raised by share issue for cash. So that was 88 for sure. I will delete these two figures in order not to mislead you. 88 should be considered as increase in cash due to share issue. Let's include it into our cash flow statement. Share issue. Share issue. And we have to consider dividends paid, if any, within that section. Within income statement, actually we have here not the income statement but appropriation account. Income statement should have the final line profit after taxation or net profit. And here below the profit after taxation we have dividend paid and retained profit for the year, and actually this is the appropriation account, the additional information. It's not the section of income statement. But we are given, at least we are given with the information about appropriation of profit. The total profit earned for the period was 70, and it was split between dividends paid to the shareholders and retained earnings. That 30 dividend paid amount was paid in cash and should be treated as cash outflow in cash in financing activity section of our cash flow statement. So 30 is the dividend paid. And now we can calculate cash used in financing activities, the final subtotal. Cash used in financing activity. And that would be 26 with a plus sign. That would be the third and last subtotal of the cash flow, the closing figure in the section 3 of cash flow. And the final thing we have to do is to calculate the net change in cash. The final line of cash flow statement, net change in cash for the period. Net change in cash equals less 10 with minus, 85 with minus, and 26 with a plus sign. The net decrease in cash would be 69. Cash decreased by 69 for the respective period. So let's underline it with the red, pink. This is the cash flow compiled. The last thing you are required to perform normally is the cash reconciliation. So we have to consider cash at the beginning of the year and cash at the end of the year. 31.03.2019, sorry, I'm talking in Russian. Cash at 31st of March 2020. And here we have to consider overdraft balance out of current liabilities and cash balance out of current assets. So let's look at the statements of financial position. We have, I will highlight it with that color, blue. We have cash balance, positive balance of cash, cash until or cash in hand, наличные деньги, of 3 and 7 as closing and opening respectively, and within creditors falling due after 1 year, in the note 4 we have information about bank overdraft. So we have to consider these two amounts. So bank overdraft at the beginning of the year was 157 and cash in hand was 7 here. So we have to sum these figures up. Overdraft of 157 with a minus sign plus cash of 7. That would lead us to cash with negative sign 150. At the end of the year, overdraft was, according to the wording of the problem, 222 and cash was 3. I'm sorry, it was 3. So the total cash was 219 with a minus sign. And the difference between these two amounts from opening to closing is the 69, as we have just calculated in cash flow statement. So we can conclude that cash flow statement was compiled properly. So this is the work done here on the screen. Ta-ta-ta. We've succeeded. So thank you for your attention, and you can ask your questions now.